If you have been trading for more than a week, you have likely heard someone mention checking the red folders. You pull up the calendar and scan the dates for those icons signaling high-impact news. Most traders treat Forex Factory as a basic wall schedule. They look at the date, see who is scheduled to speak, and then close the tab. This superficial use of the platform creates a gap in market intelligence. When retail traders move based on a calendar date alone, they often provide the specific liquidity that institutional orders need to fill. Forex Factory functions as a command center for market data. It provides the same data-driven insights that professional trading floors use to evaluate the strength of a move. To navigate the market alongside these participants, you have to look past the schedule and learn to anticipate how the market will actually react to the numbers. Take the U.S. non-farm payrolls, the monthly employment report released by the Bureau of Labor Statistics. In this scenario, the market forecasts 185,000 new jobs. The actual comes in at 190,000. It beats the forecast, so the folder stays red, but the dollar might still sell off. If the previous month showed 210,000, that 190,000 actual represents a significant economic slowdown. To find these nuances, you can click the yellow detail icon next to any event. It lists the underlying economic theory and links directly to the source data, like the Bureau of Labor Statistics. The market is not reacting to the folder color, it is reacting to the mathematical deviation between the expected forecast and the actual result. Beyond economic data, the Market tab provides a sample of where retail traders are currently positioned. Imagine 85% of traders hold long positions on GBP/USD. As price drops, they remain underwater. Their stop losses, effectively sell orders, sit clustered just below the recent low. Heading that cluster triggers massive selling, creating a long squeeze that drops the price 30 pips instantly. When sentiment is lopsided, typically above 75, larger losses than wins highlight a fundamental issue with your risk-to-reward ratio. Without this objective data tracking, it is difficult to distinguish between a functional strategy and a temporary run of luck. You can consolidate these tools into a 15-minute routine to execute before the London or New York sessions open. Start with the calendar. Identify the high-impact times and review the historical deviations to determine which direction the market is already leaning. Next, check the Market tab for sentiment extremes. Mark those levels on your chart as zones where trapped liquidity might spark a squeeze. Finally, review your Trade Explorer. If your current drawdown is high, reduce your technical risk by half until the account returns to the green. This routine moves you from reacting to the news to anticipating the market's response to it. Go to the Forex Factory Market tab today and find a pair where retail sentiment is over 70%. Watch how the price behaves at the next support level and execute your strategy on FXNX's zero-spread platform.